All right, traders, tomorrow's going to be the last trading day of the week. Fridays are expected to be my best trading days. They are also the most lucrative trading opportunities with the current market volatility and the same day expiration options. With that being said, I'm going to show you and prepare you to trade the best setups at the best prices heading into tomorrow. If you watched my previous video, I told you guys that if SPY pulls back to 391, that pre-market low and lows from yesterday, that's going to be a great opportunity to dip buy calls if you see a bullish wick, and it will likely not crack that 391 level. And that was literally the lows from today. In terms of my portfolio, it is currently up 3.93% on the day. I started the small account challenge on Monday. I've traded every single day this week despite being sick. And with that being said, the portfolio is up 3.93% today. I ended up taking 14 trades within these past 4 days, all green trades, one small loss, 13 wins, very quick micro scalps. Today was one of the best days of the challenge. I had a very, very nice trade with a nice SPY put scalp at 12:09 p.m. And I prepared people in advance for this trade that I was going to be taking. I kept mentioning I see this pattern in history where SPY is going to have a nice little micro pullback of 50 cents to $1 where we can scalp a put and make a quick 20-30% return. It worked out phenomenally. I'm going to be recapping the trades. And most importantly, I'm going to be preparing you to trade the best setups at the best prices. So we're going to get straight into it. Make sure you smash that like button. So in terms of SPY, these are some things I want to bring awareness to heading into tomorrow. There is a gap that is waiting to fill at $401.44. The major resistance on the SPY was at 395.78, 395.78, right? If it goes above this and it starts forming support at this 395.78 level, you can see on the daily chart, there is no resistance, but there's a gap to fill above. So if SPY breaks above the high of this candle right here, and it's nothing but air because it had this gap down during extended hours, it's going to start to rally up to fill the gap. So what we're going to do is we're going to draw a trend line at that key level. And as long as the SPY continues to hold and stay above that level, it is going to continue to push and fill that gap above. So in terms of yesterday's analysis, like I had explained to you guys, if you fully watched these videos, for those of you who are fully watching them, you get the full dish on, the best setups at the best prices. And I save some of the best information, the very lucrative money-making information towards the end of these videos for the people who are really serious about, mastering this strategy and making money within the market. We've identified that there was a lot of pre-market support at 391. SPY kept rallying up, closing strong to fill the gap. And I told you guys, I think it's going to start going back down to 391, right? And that's exactly what it did. And then I told you within that video, when it hits this 391, when it hits this pre-market supporting yesterday's low and this support right here towards the previous closing price, that's when it's going to start to spike. That's when it's going to start to rip up. And that is exactly what occurred. And it occurred at the same time. You could see a very similar move. SPY pulls back. Check this out. SPY has a little micro pullback. It bottoms at 10:05, 10:10 a.m. Right here, SPY has a little move up, crashes, bottoms at the same time. So when you see it doing that pattern where it bottoms at the same time and you see these wicks, you see this bullish wick right here on the 1 minute, you start scalping calls. And when you see that this resistance, resistance that turned previous support into resistance starts to break out and it forms another wick right here, you scalp calls, For those of you who watched that video where I explained to you how to scalp at the previous closing price, you could have used that same strategy to scalp at that low 391 level. If you actually watched that video, you would have seen this pattern with or without me. You would have seen it and you would have taken advantage of it if you were interested in buying calls, right? So I wanted to bring awareness to, in terms of that strategy, go back, watch the full video. You will see exactly all the reasons on how to and why to make that potential trade. Now, in terms of where we're at right now, we're forming higher support. Yesterday's high is now support. This is yesterday's high. It's now reacting as support, pushing higher to narrowly fill the gap. It topped out at 399, had a nice little micro pullback to 397. But the point is, it is still holding this major resistance. We have some major resistance on the SPY from yesterday and also from today at $396.50. We'll call it 396.50 to 396.70, major resistance, nice downside potential at 391. Well, SPY broke above that resistance and it is attempting to turn it into support right around here before the nice breakout, and also during extended hours, we got a nice little wick right here, and it starts trending up with these wicks, right? If you ever see the SPY have a nice pullback in your scalping puts and you see these bullish wicks, sell the puts. And that does not mean to buy a call, but that does mean sell your puts. It is going to start to rip, especially if it's at a key oversold level. So those wicks and those candlesticks will change the way you trade. It will save your life, right? Now, here's some points I want to make on why this looks so bullish. This candlestick right here on the daily, study how SPY reacts when it forms this candlestick on the daily. Overall, it goes up. You can see it forms it here, it forms it here, it forms it here. Same candlestick, it starts to go up, right? You could see it formed it right here. This was towards resistance. The next day, it went a little bit higher, and then it topped out this resistance. Nice sell-off, right? So I want you to keep in mind, this is a bullish candlestick. However, it's at major resistance, and there's a gap to fill above. And SPY has a strong history, especially in a bear market, when it closes a gap to have a short-term reversal. And another thing I want to bring awareness to in terms of bullish thesis on why we're likely going to fill this gap, if you've been studying stocks, this could be a situation where it's a delayed reaction with SPY. A lot of stocks have had some nice gaps that are waiting to fill above. Tesla had a nice gap that was here. It filled the gap and it kept rocketing higher. And I'm going to show you this is happening with a lot of stocks. Walmart had a gap to fill right here. It filled it today and it kept going higher, right? So a lot of stocks have already filled their gaps, unlike SPY, and have continued to go higher. So that could mean this is a delayed reaction where SPY is definitely going to fill the gap, but that doesn't mean it's going to go higher. We have to see how it reacts. And if we get a bearish reaction, then we play the puts for the gap close reversal, which means the gap, which when SPY goes up and it fills the gap and it forms the bearish reactions, bearish confirmations, we play puts on the green candles prior to the bearish, after the bearish reaction, wait for the green candles to perk back up, play the puts for the trend reversal, right? If we get that confirmation. But I do want to bring awareness because a lot of the stocks have not only filled the gap, unlike SPY, but they have been going higher than the gap, right? So I want to bring a lot of awareness to that. So here's what I want you to keep on your radar for tomorrow. Write down these key levels. I'm going to give you 2 stocks and I'm going to give you SPY. So there's a gap to fill right here at 184 on META. 184 gap, big downside potential. If you see it react as a resistance, if you see it struggling, if you see it forming bearish top wicks, some lower highs, play the puts at that level. Once you get the bearish reaction, play the puts when it starts to bounce back up into the green candles when it looks bullish. That's when you play the puts. You confirm it with a bearish reaction, then you wait for it to bounce back up, and then you buy the puts into the bounce back up to get a better entry, and it's already been confirmed, right? That's how you want to do it to get the best entries. So you can do that with META, excuse me, and you can also do that with what was the other one? Nvidia. Nvidia was the other one. So Nvidia has a gap to fill right here. Previous support could react as a resistance, big downside potential, just like META. So for Nvidia, it's going to be $180.48, right? So if Nvidia reacts as a resistance level at this, you will see a nice trend reversal for a nice scalp on puts, intraday trade. If it breaks above this and holds 180.50, it is going to be bullish and it's going to start trending up towards 185, 186. So I'm giving you the make it or break it levels. And what I want you to do is I want you to focus on these levels and I want you to identify if it's reacting as a resistance as the roof, meaning it's forming resistance. It's struggling to break out. It's forming bearish wicks. It is forming lower highs. It's turning previous support into resistance prior to micro pullback. You see those bearish confirmations, play puts into green candles after the bearish reaction. And then in terms of the call side, I'm not too attracted on the call side, right? I get it. Like it just keeps on ripping up. Calls have been banking, right? I've played 14 put scalps within the past 4 days. Most people would think I'm losing money. I only had one small loss. My holding time is very quickly. I'm holding these for like a couple minutes, making a quick 10% here, 20% there. Trading like a sniper, scalping, not holding, compounding my gains and sizing in with only 10 to 20% of my portfolio. And I never hold my losers longer than my winners. Therefore, as long as I use my strategy, I will never lose more than I win. It's just not possible because I'm never holding a loser longer than I would hold a winner. And I don't hold winners even that long. So with that being said, I want to bring awareness to that. How I'm able to keep losses so small. I have a great risk management strategy. I get in, I get out very quickly. If the trade starts to go against me very quickly, that means my entry was not good enough. I didn't use the right confirmation. And it also means I have to cut the loss extremely quickly due to that reason and due to the poor timing. My strategy doesn't just it doesn't need the best timing because I'm getting the best entries, but I figured out a way where I can time it perfectly and get the best entry. And that's what I love doing. Therefore, I use the closest expiration because I'm only in for a couple minutes up to 10 minutes. So I want to bring awareness to all that. And then the SPY. So for the SPY, the key level for the SPY is 401.44, right? That is the best level you can buy puts tomorrow, is 401.44. Write that down. If it doesn't happen tomorrow, then next week. That is the best level. Look for the bearish reactions at that level and have awareness and understand that a lot of stocks have already filled their gaps, unlike SPY, which is kind of making this a bullish delayed reaction. And a lot of stocks have went higher. So never underestimate a level. You have to understand, if you're trading the best prices, if you're trading the best setups at the best prices, you need to respect the fact that if it's not working in your favor very, very quickly, then that means that it's just going to keep on pushing against you. That means that it's going to be a loss. So you need to cut that loss very, very quickly, because if the trade can't work at the prices we're entering, then it's just not going to work and it will go against you a lot and you will lose big if you hold a loss, even if you have a small position size, because you'll be giving back the vast majority of your wins, because in that situation, you never want to hold a loss longer than a win, right? So I want to bring awareness to all of this in terms of my trading style. So with that being said, you really want to sharpen up your timing, your confirmations. All these trades were on SPY. I haven't even been trading stocks. I haven't been finding good stock setups lately. All I've been doing is scalping SPY every single day this week. It's just green days. Even last week, I think in total with my portfolios combined, I'm on like an 8-day green streak. It just keeps on going green because I understand risk management. I understand when to get in. I understand when to get out, rapid fire, very, very quickly. And in terms of the vast majority of these trades, a lot of them were scalping against the trend. And it's very hard to make money scalping against the trend. Unfortunately, I didn't play any calls this week. I had a great idea for calls. I gave you my analysis. You could take advantage of it. If you watched the videos yesterday, I showed you how to do it, and you could do it on your own, right? This isn't, let's just blindly follow my trades. That's not what this is. This is an educational program that shows you when to be bullish, when to be bearish, and you could take advantage of that side. Obviously, I'm more focused on puts because that's what has worked best for me, especially into 2022. And that's what has made me, hundreds of thousands of dollars. But with that being said, I don't have to grow on the call side. I can show you guys how to buy calls and I can show you guys the best levels. That doesn't mean I have to do it. I'm just going to do what works best for me and continue to improve in that area of what's working best for me. If I'm going to experiment with something new that I believe is working, but hasn't led to my massive success in trading, that's completely fine. But you have to understand that's going to complicate my style of what's already working. And I have to grow and improve in that area. So it's a whole new skill set, a whole new style of trading, right? Of like trading both ways, which isn't required. But if I wanted to do that, I could, but it's probably best to, develop strong discipline with that, to develop strong consistency before sizing in big. A lot of people come into the market with a lot of money, but the problem is they never made money in the market. So they already made their first mistake. If you want to learn how to trade within the market, you have to actually trade. You can't just paper trade with no emotions. It doesn't work like that. You have to actually trade, and you will make mistakes. No matter who you're learning from, you're going to make a lot of mistakes in the beginning. That's just how it goes. You have to pay your tuition. You have to learn from your mistakes and learn from other people's mistakes, right? But the point is, you're going to make a lot of mistakes. A lot of people have to rewire the way they trade. A lot of the way they trade and a lot of styles they learn, it's not the right thing for them. You have to identify what style works best for you. For some people, holding and big wins works for them. It really does. For me, I've identified that scalping is the best for me. You have to figure out and identify what works best for you, right? So that's something you really have to identify. And then once you identify that, you scale and you improve on it. You build a strong backbone. You build strong consistency. And that's your key to making money. If you're bouncing around with all these different strategies, I'm going to hold here. There's different rules to different strategies. You literally have to have a different mindset and be in a different state of mind to trade multiple strategies. And I'm not saying it's not possible, but it is going to complicate your trading and make it very difficult to grow your account in that sense. because you need a strong backbone. You need consistency. You need that awareness. You need that conscientiousness. You need to master one thing. That's what I believe in. I believe in you need to master one thing. And then once you master that one thing, you need to scale it exponentially. Tune out all the noise, figure out what works for you, scale on that, and consistently find ways to improve on that one thing. Then once you turn a small amount of money into a large amount, if you like, you can experiment with other things, but with a small amount of money, because in the beginning, you will lose money. You will make mistakes. That's the reality of the situation with trading. The worst thing you could do is start with a lot of money, because you're just going to blow through a lot of money. My strategy is a very conservative approach where you can make a 2% daily compounded return. So if you pull out a compound interest calculator and you take out how much money you plan to start with, and it shouldn't be with a lot, because at first you are going to lose money. You're learning a new style of trading, and the style might not even be for you. It's going to take some time to learn and instill this discipline and instill this mindset and instill this type of style of trading. And it might not be for everybody. But for me, this is what has been working. And I'm telling you, if you pull out a compound interest calculator and, if you type in 2% in that calculator with your account balance, just enter in like 250 trading days. You have 250 trading days a year, and you will see how quickly just a couple $1,000s can turn into over 6 figures. And then once you get to that 6-figure mark, you will see how fast it turns into millions. The reason why people aren't trading with millions of dollars is because they're full porting their portfolio. They have no strategy in terms of risk management. They're holding, aiming for big wins, when the reality of the situation is, if you want to win big, you need a big account. You don't need to hold. You don't need high percentage returns. If you're trading with $1 million, you put in 20% of your portfolio into a trade, that's $200,000. You make a 10% return, which could be done in minutes on a scalp. You just made $20,000. That's what you need. You need a lot of money to trade with, right? So get to that level where you can do it. If you're trying to flip an account from nothing to something rapid fire, instilling the wrong principles by doing YOLO plays, by going all in, by doing all of the wrong things, you're not going to make it in this game. You have to play the long conservative game, and a 2% return daily is insane. That is not conservative, but it's not high risk the way I do it. So I figured out a way where the options for me aren't high risk, because I'm not taking big position sizes. I'm not holding them very long. I cut my losers extremely quick. I never hold a loss longer than my average winning time. If you don't know the time of your average winning trade versus your average losing trade, you're already messing up. You have to make sure your average time of a loss is lower than the average time of a win. Therefore, you're cutting your losses quickly. You have to make sure you're only sizing in 10 to 20% of your portfolio. You have to compound the account. If you're taking money out of your account, that means you don't have something that is consistently working, that you can rely on and trust with a large amount of money. A lot of these people who quickly flip accounts with a small amount of money into a large account, they take their money out because they know that money can go just as fast as they made it. But if you're doing what I'm doing, you would know that the more money in your account you have, the better returns you can make. And you would trust the system, and you would realize it's a conservative system, and you would realize, man, I don't want to take money out. I want to keep putting more money in, because this is a money-making trading machine. This is going to keep on making me money, consistently profits. Why go down? Why not just keep going up and compounding the account? And that's what I'm going to show you how to do. And I'm only doing this for a limited time only. You're going to see how this grows over time exponentially. The portfolio is already up 16% in 4 single days, and every single day is green. 13 out of 14 on the trades. And the trades haven't been that great. They really haven't. They've been quick 7-10% returns. Normally, I've been doing a lot better. In terms of today, I did a lot better. I only used about 40% of my portfolio, and I made a 4% return on the portfolio, and I had a very nice scalp. So this was the trade. The trade was right here. This was the good one. I entered puts, and I prepared people much further in advance for this. At 12:09, I bought puts on SPY. Why did I buy puts on SPY at 12:09? Right here, I'm going to draw an oval. I'm going to draw an oval exactly where I sent out that alert at 12:09. Why did I decide to do it right here at 12:09? Literally at the top. How was I able to figure this out, right? On a bullish trend before the reversal. Let's go to 12:09. So in terms of 12:09, let's see. It's right here. So here's, let's see. Okay, so it's right here. Here's 12:09. right here, before the red candle, the highest 1 minute candle, before it had this nice pullback. Some people might be saying, man, that's a small pullback. Guess what? Puts one up 20, 30% within this pullback. And guess where I got out? On the first green candle. I got out right here. Sold the fucking bottom. Easy money. How was I able to do this? I studied the chart. There was a lot of resistance at $396.94, right? So $397. There was a lot of resistance at $397. So I'm looking at this chart and I'm going, okay, where did SPY have a nice pullback yesterday? Oh, right here at 1210. Look at that. Right here at 1210. A minute before I bought those puts. And then it has a nice pullback. And then it bounces. Wow, the same thing repeated. Shocking, right? So shocking. That was one of the confirmations I used. Also, looking at the daily, I knew there's a lot of resistance right here towards this 396 level. I knew it was going to be an attractive level for puts. And this is an overreaction. From low 391s all the way to this 397 level, rapid fire, within 1 hour and like 40 minutes, you don't think it's going to have a little micro pullback? And also, look at the pre-market resistance. The high of this wick. What do I say about wicks at resistance all the time? It crashes. It sells off. What do I say about wicks at support all the time right here? It bounces. Do that at the highs of the weekly channel and the lows of the weekly channel. You will be printing money like it's no tomorrow. You get in, you get out. So I identified the pre-market resistance right here. It was at 396.71. I told myself, this is an overreaction to the upside. Even though it's on a bullish uptrend, if I see reasons to buy puts, and right here, it even sold off at this level, which confirmed the double top. And if you studied yesterday, it had a double top before that period of 12:09 p.m. like here. So much history repeating itself. So it was a very nice opportunity for puts, and I took advantage of that opportunity for puts. And then, unfortunately, I didn't make another trade. I had a really good trade idea later into the day to scalp puts right here at $397.40. Literally right here. I was saying this is going to be a good idea to scalp puts. I had people take this trade right here. I was saying this is going to be a great opportunity for puts, literally at the top. I didn't take the trade. I was already up nicely. I went 3 for 3 today. I exceeded my daily goal of 2% average, making a 4% return basically on the day. I didn't want to take it. And I didn't like the way that SPY was trading at the time. But I did tell people, basically, if this cracks this 397, that resistance level where I bought puts prior banking, if it cracks that, it's going to be a bloodbath. And as soon as it cracked that right here, nice rug pull. You're making 30, 40% on same day expiration, the close expirations with that. Quick in and out scalps, right? Obviously, calls have been making a lot more money as of lately. And I gave you guys the analysis for the calls. If you want to take advantage of that, you do you. I'm doing me. But I gave you the analysis. I gave you the plan. I know what works best for me. And there's no reason for me to grow better in a sense on something that hasn't led to my success. My success, in terms of 2022 has been on puts. But I still need to learn how to read price action. I still need to know when is it time to buy calls. That doesn't mean I have to buy them, but I need to know when is it time to buy calls. When is it time to exit puts? When is it time to be long buys? I need to know that. You need to learn how to trade both sides, but you don't have to trade both sides, right? Like I said, you find one thing, you scale it, you compound it. That's what will lead to your success in trading. You'll become so good at that one thing because you are doing nothing else. You are perfecting something that is consistently happening over and over again. And you have nothing else to clutter your mind or interfere with it because that is all you're doing. One simple trading strategy. And you don't have to use it both ways, but you do have to learn how to identify when the bulls or bears are in control. So you know when to not take the trade, when to exit the trade, when to sit on the sidelines, right? So I hope that helped a lot. I wanted to share with you guys some advice in terms of like growing the account and stuff like that. I'm sick and tired of seeing people making big returns daily, but you don't hear about them amounting to anything great, anything over 6 figures, anything over 7 figures in a couple years. You don't hear from them because they blow up their accounts and then they restart, the cycle repeats, they never fucking change. So I'm trying to wake people up so they can change. I'm trying to show you the most conservative approach to trading where you can grow your options trading account rapidly, right? You got to learn how to trade options. These options are very, very simple. The way I trade them, if I were to trade SPY and trade shares, oh my God, I would need hundreds of thousands of shares to make good money on that. The returns are so microscopic if you were to just trade these stocks. But if you trade the options, the returns would be over 10x. And it's just crazy how you can make a 20% return within within minutes from a 20 to 50 cent move in your favor on the SPY. If you are getting at the best entries, like I say, you wait for the bearish reaction, then you buy when it goes up, not when it goes down. If you buy when it goes down, there goes your big percentage return. You already fucked up the trade. You have to get the bearish reaction and then buy. Look at this. This is where I bought my puts. I had the best entry possible. I bought the puts, like I tell you guys, on the green candle. On the green candle, man. Literally right here. 12:09 p.m. Where is it? 12:09 p.m. Right here. This is 12:09 p.m. Why here? I explained to you why. And you might be saying, well, this candlestick, we look kind of bullish. It's trying to break out. Well, look right here. This is a wick. You see the wick? That's my bearish confirmation, that top wick, along with all the reasons why I explained to you as well. And then, like I told you, this is my bearish confirmation. What I tell you, wait for it bounces. It bounces, I get at the fucking top. When everybody else is scared trying to buy a breakout, they're scared of puts and they're trying to buy a breakout and they get stuck holding a bag for the micro, I get in at the fucking top. That's what I'm trying to show you, man. So I hope that helps. I hope that makes sense. In terms of SPY, for those of you who states then, 4144 is the best level for puts. In terms of tomorrow, this is what I want you to understand. I want you to be aware of this price as well. 398.79. If it drops below 398.79 and it cracks 397, we will likely see a pullback to about 395, this previous closing price at least. If it pulls back massively, I would say the best price to buy calls for tomorrow. If we get that big pullback, best price to buy calls, I would say, is towards these pre-market lows right here, 393. Absolute best 391, but due to the breakout and higher support forming, it's likely not going to go that low if it does pull back. So I would say 393 if you're playing the calls. With that being said, if it cracks 397, it's going to see a nice move to 394.77, which is a make it or break it level. This is going to be a make it or break it level for SPY as well. 398.79. Once that, for those of you who are wondering, when is SPY going to fill this gap? Not until you see a break above and support form at 398.79. If that can occur, then it'll be on track to rip to 399. Once it breaks above 399, turns it into support, then it finally fills that gap at 4144. If we crack 398.79, you're going to see a nice bearish reaction. If we get a nice bearish reaction like we did into the morning towards open or towards 9:50 a.m., it will likely recover and bounce at 393. Those are my thoughts. Those are my analysis. Best level for puts is going to be 4144. If we see a breakdown and we see 398.79 turn into resistance, that will be the best level. One of the best levels. Right now it's gapping down. So if it opens up red, wait for it to go back to the previous closing price. If it hits the previous closing price, forms the bearish confirmations, the bearish candlesticks, then you can micro scalp the puts there as well. So those are the two key levels. If it gaps down, there's going to be a gap to fill at 398.79. Pay attention to the patterns, pay attention to the strategies. There's going to be some very important updates within Trader Society tomorrow morning. We are going to continue to master trading the SPY. The SPY is all you need. It's the most lucrative trading. It's the most lucrative option, option to be trading. It has the highest liquidity, one of the highest liquidities. This is what all the rich people are trading. You don't need a lot of money to trade the SPY. Once your account becomes bigger, it makes more sense in certain situations to trade SPX, which could generate bigger returns. And there's tax benefits as well to trade in SPX, right? That's for once your account gets bigger. There's certain situations where it makes more sense to trade the SPX as well. So with that being said, we're going to crush it tomorrow. If you want to be a part of Trader Society, it's going to be the first link down below in the description. Once you sign up, you get instant lifetime access to everything included within Trader Society. And the small account challenge is for a limited time only. You're going to see, once this account grows exponentially, I will have that title where I turn this small amount of money into this amount of money. I'll have the title, and prices are going to continue to raise as this small account challenge goes on. Because this is something I'm not going to be frequently doing. This is a very rare situation. Trader Society is going to have over 1,000 members soon. And this is a situation where A lot of people want to see someone grow a small account. So I'm going to be that guy that grows that small account for them and show them how to do it, because most people have small accounts, but I'm not going to consistently do it. Eventually, I'm going to have to hire people who've mastered my strategy that can teach them to, grow the small account. But this will all be documented. I will be making video lessons, in-depth recaps, teaching this as well within the program. Everything will be documented where you can go back and watch the video lessons as well. So if you want to participate in the small account challenge, and if you want to join Trader Society's lifetime instant access, where you get access to the Discord, the live streams that I do at Market Open, the upcoming voice channel, right? And there's just so much more to it. The video lesson library where you learn the unique price action trading strategies. You also learn, how to trade both ways, how to trade the options, everything it is that I've learned over the markets past decade. Also learn psychology, position sizing, risk management, most important things within trading, right? If you want to conservatively grow an account and compound it rapid fire 2% returns daily, this is going to be the right return for you. Going to be the right program for you. Surround yourself with a network of traders within the Discord. There's so much more to it. If you want to check it out, it's the first link down below in the description. You can get started trading live with us at Market Open tomorrow, right? So with that being said, it's the first link down below in the description. If you do want to join us, I'm telling you, this commentary that I'm giving in the SPY and SPX chat room, this is money. I'm giving out free money within this chat. I've already exceeded the cost with not a lot of money. I've already exceeded the cost of Trader Society. Within the first 2 days, I already exceeded the cost of the program. Now I'm approaching 150% plus the cost of Trader Society. It's just going to keep on climbing within time. So I'm just going to try my best to stay green. And most importantly, no big red days. 2 videos ago, I explained to you guys towards the last 10 minutes of the video. If you watch my video 2 previous videos ago, last 10 minutes of that video is like a 57-minute video. Last 10 minutes, I explained to you all the small account challenge, the style, the contract selections. It is all in here in terms of how it is that I'm able to do this, right? So if you want to adapt a new approach to trading, this is going to be the right program for you. I'm looking forward to working with you. It's going to be the first link down below in the description. I will see you tomorrow live at Market Open.